Greetings, market rebels. Welcome to this week's sector situation. I'm Wayne, my partner Ryan's getting the market outlook, market overview out for the week. It's about, I think, a little after 2:40 here on the East Coast, Sunday, February 12th, 2023. Let's see. Here we go with the disclaimer. Did a lot of talking to macro measure, so a little winded here. Also, we've got our trustee market rebellion intellectual property and rights notice, so please have a look at that. Macro measure was a whirlwind. I've got to switch over to our charts, so just bear with me, please. That was quite a whirlwind there. So let's see if we can get the chart shared properly. And now we've got to cover the sectors here. And there were some interesting developments as the week wore on, and then Friday was really interesting and shifted a lot. So we'll take a quick look here this way, but I think it's probably worth taking the time to go through the charts individually in bigger views. But mostly, right, you can see that a lot of sectors ended sort of in the middle of the RSI range between overbought, oversold. Some things like technology still over 60, but a lot of things kind of in that mid 50s, mid 40s, the exceptions maybe with the utilities being on the lower side. But most things were somewhere in there at this point, which made it even harder in macro measure, because I'd like to try to come up with a lean or expectation was very hard. It was kind of like splitting hairs, I think, when you add it all together, at least the way my weighing mechanism is set up these days. Anyway, so let's talk more about things directly. So I'll move this out of our way. Let's try to look at all of those and a few more, but let's do it with our usual base chart, which is right here. And we'll take I think this is the one we usually use. Yeah, I think we'll stick with this. It's a little, believe it or not, there's better clarity here. I'm just going to go in order. So XLE, this had a really interesting Friday that kind of told me, along with other things I talked about in macro measure, that it seemed like the market took on a defensive posture pretty strongly, in my opinion, on Friday early. But by the time the day wore on, just as they moved everything back up right to or near critical support in the Qs and SPYs, things became a little bit more mixed, where it wasn't as defensive in terms of how it had been relative to how it had been. So, I don't want to read too much into it, but if we look at XLE, this has been a tough one to trade, I think, since here, where we started getting a little more concerned about it. Let's just look at it objectively, uptrending, right? Intermediate uptrend for sure. Little concerning here with this lower high versus back in here. These lows are all about the same. Now we do have a higher high, and we have it moving off that 100 SMA there in white again, and it's starting to swing back up. And the RSI reading here is about 55, so it has more room. There's a little gap there that it could certainly fill. That should be a resistance level right near there anyway. It's not very far away. It's only like another % up, so it looks like more, I think, on the chart than it really is. But it is what it is. Right about there near 91 seems like a pretty big deal. For now, this is really strong. This had some sort of a Russian news development that I think they were cutting production somewhat, that seemed to help spur that on. It was already on its way, I think, though, at some point before that hit, but don't quote me on that because I'm not positive exactly when that news came out. But yeah, I mean, it's coming back up now, another attempt, right, to bounce and what happens here. But look at these formations, right? This is not a typical thing you see in a chart. These are not things that are very common. This kind of diamond situation, this kind of volatile consolidation that went on for a while, this big push here, this drop back down. It's usually, right, you have these big runs, the bulls are in control, and then that ends, it's over, boom. But this has been very tricky in the fact that it wouldn't break down and it wouldn't break back up. So it is what it is. But overall, right, with the uptrend still intact, I guess you have to give the nod temporarily to the bulls, right? Things are still, you're above all your SMAs, the 20, 50, 100, 200 on down. You've consolidated for a while after a really strong run. You didn't give back too much of the run that you did enjoy. So I think there's a lot of positive factors there at this point, but this thing needs to start doing something, right? If we're going to trade it. So it's not a chart that I love because, like so many people, right, I'd rather see a nice basing formation that went on for a while and then we lift out of there. This is not a bad one in terms of that, but I mean, just the up and down factor that we've had after this sort of diamond appeared. Yeah, kind of like a very different kind of look. So not something that I've seen a lot of that I feel so wonderful about saying, yeah, I really think this thing should move up. There's the most likely scenario. I do think it probably looks like it's going to do that, but I think you have to wait and see. Hopefully we'll see a lot of UOA. We normally do when there's going to be a big move in energy. We get a lot of UOA activity in these names that are in this space, and that you could see that whole complex moving up here. Individual stock charts look good, things like that. But I did add a bullish idea. I did have some paper. I think it was XLE directly. Hopefully it'll pay off. I think it got off to a good start for people that traded it. Hopefully it'll deliver a little bit more. But right, what you'd be on guard for here, excuse me, would be that this puts in another low. If it does come up here and fail and puts in another low or high, right, then you're starting to think, okay, am I in this even bigger consolidation than I realize? And what that might look like might be a triangle, right? If you start getting up and that just there it is. It disappeared and then it came back. Not sure what I did there. Might have gone off the screen. I'm not trying to draw this perfectly. I'm just going to try to put this together like this and out to here, maybe just for starters. So maybe you're in that, you don't even realize it, right? But that's why maybe it hasn't been, unless you're collecting premium in there, maybe it hasn't been all that wonderful. But I would say, look, I don't think the bulls are in complete control there because clearly, right, it's been consolidating somewhat, but I'd still on balance give them the benefit of the doubt until they no longer deserve it. And by my measures, I would give them the nod that they're still in control to this point, but not really in a way that I'm feeling super confident in at the moment. XLK technology, clearly a big space. I would say the bulls are in control of this. They have been in control of this. I feel pretty solid about the longer term control at the moment here, but I think the short term control is a little concerning. So, and then if that does worsen, right, some of the bigger picture control would give way, right? Obviously things start on your lower time frames, but this to me, you could almost see the line, right, without even having to draw the line. So there you have it, right? There's your line, right about there's probably a good spot to put it, ballparking it there for now. But you get the idea. You drop down below there, probably comes back a little bit more. We've got the rising red 15 SMA coming up there. We've got the 20 right below there. Probably a visit to the 20 rising 20 would make sense if it cracks here still. And you can see that last couple of days it struggled. I'd feel better if I'm a bull, frankly, if it drops back to here, find support near the 20, above a couple of these highs. There's certainly a flat line mixed in there somewhere near that 136-ish level, and then kind of lets these things continue to repair themselves and start to continue to roll higher, right, to kind of curve up. That would be a nice little development if you're a believer in this. But look, bottom line is higher low, right, higher high, got outside of our relatively narrow Bollingers. Little concerning, as we always say, probably due for a pause or a pullback. You kind of at least got a pause, you might get a pullback. Wouldn't hurt it all that much. Then you see if it can hold on, right? If it's above there, it's above the downtrend line. So probably 135 is really your level and mark in the sand. It would then get concerning below there, because then you'd be maybe giving up the 200 not too far below there. and so maybe some others as well. But the 200's really a widely followed the level, which is why we keep it on our charts. So that would be concerning. But right now, again, kind of like barely, or I should say, somewhat giving the bulls the benefit of the doubt, but still thinking in the short term, probably a little bit more of a pullback would make sense. That really fits with the seasonality that we've been tracking for the third presidential year. And technology is such an important sector. It usually, usually cooperates with the market. Usually they're kind of moving somewhat in tandem. So here's the communications, our next one up. This is right there on the 20, right? So I think this breakout level and where this thing got to probably is 54, not only down like 1 to 2% more. The 200-day is down about 3% from there on an overshoot. But I think, again, I'd give them the benefit of the doubt as long as they can hold it above the 200 and then start to go from there. That's what I would look for on that one at the moment. So it's hard it's a lot harder to make really strong calls when you've had a big run. So the trend is intermediate term, your RSI is middling like it is right now, and you've already pulled back significantly visually and on a percentage basis, and you're right on the 20-day, and you've got right above the 200. So it's really hard to say, yeah, I love this short trade here, because even if you're right, and you could be, what are you really going to get out of it? It's a little trade, right? It's not this short term, not this longer term trade that you could ride in a big way as of yet. At least that's the way I view it. But in terms of control, I still would say it's probably favors the bulls overall. But I kind of feel as though that ought to come off a little bit more. And then you see what happens. I think the 200 is the key thing to look at there if you're trading in that sector. XLF, this one, you can see the 50 is the big deal here, because, right, you can see that this is sort of tantamount. You can see the inverted head and shoulders. We've been talking about the patterns, and there's a lot of bullish patterns out there, little mini cup and handle type thing. But this really to this point has really failed to fire more. So I kind of look at this as on the verge of failure. And so losing that low on Friday, and there's a support level there for short too, that probably does open it up to dropping a couple more percent, which would be down to there'll be a flat line near there too, maybe 35, 36, but the 50-day will be right in that mix. We're talking about pennies. It's a sector that doesn't move much. I think on this one, I'm willing to still give the benefit of the doubt to the bulls, but in the overall grand scheme, because it is making higher lows and has made higher highs and is trying to do a trend change. But it does look like short-term a failed breakout attempt. And you just can't be shocked after that if they put the screws to these breakout buyers and bring this thing down. And remember, second half of February, the middle of the second half of February is rough if you follow that third year that we covered in macro measure. And that's probably even more the case, I would think. If you've had a very stellar burst to start the year, it's probably not crazy to have a little bit more of a pullback, right? To just percentage-wise that you pull back a little bit more than would typically be the case. So that's my way of thinking about it. Again, we're going to adjust in as close as we can to real time. That's the way we roll, the way that Ryan, myself, and Greg do things. For many years on the floor and on desks, we did the same thing, just adjusting as best you could to what was the shifting dynamics. Here, real estate kind of boggles my mind, that this was able to muster this move, really a 30%-ish almost move higher, not quite, but not bad at all. And now, right, losing that, another one that got up there, kind of a false breakout, maybe, hey, we're taking out, these highs, we're bursting above the 200, got outside of our upward Bollinger, as you've heard me say already in this video. That's something we don't immediately start fighting. We embrace that until, right, we see that momentum really stall. But after that, I tell folks, look, I would expect a pause or a pullback, and you've gotten, that pullback now. So now that you kind of fell below the 20, reclaimed it, but you're right below the 200. So you're stuck in that 20 to 200 window, right? Between those two, that's tough, right? What do you do? And just because you get back above the 200, I'm not an immediate buyer at that point. I think it's very clear that you would need to wait at least until the stock gets, well, I should say the ETF gets to about 40.75, probably really 41 is your ballpark to start feeling better about it. But again, that would be in a rising market where things are really strengthening. And that's not the way that things really finished last week. So I don't know if it's a great juncture to want to try to force along here, especially right with the way that rates have shown that they're a little bit of life, excuse me. So rates have been struggling. We've been covering that. Here's the 10-year yield, but here's that corrective activity we've been covering for a while now, but now it's starting to put a little something together here. So just, the dollar and the VIX, I would keep your eyes on those next week or this upcoming week, because I think, right, it does seem like things shifted a little bit. So I would be a little careful. I think real estate is, not that it shocks me, because they do manage to put amazing work together during bear market rallies. And if we are still in a bear market, it's no surprise that they were able to put this tremendous rally together since those October lows. All you need to do is look at the chart in 2022 of SPY, and you'll see many, many really interesting rallies that were there to be traded. And you could have done very well if you were willing to jump on board just on a short-term basis against that major major trend that developed in 2022. But XLV, this was up on nicely on Friday, part of that defensive grouping. If you look at it this way, right, strong performance, got overheated. This is really interesting. I think just worth noting for folks that are newer. Here's your high, here's your high, here's your RSI readings that correspond high and lower. So one of those negative divergences there, and you put that together with being outside of Bollinger Bands, then you put the loss of an aggressively drawn support line like this one, losing that support, and it all comes together as a good entry point. So just a little, just a good thing to point out. I think if you're new, maybe that will help you out if you're trying to learn more about this stuff. But look, good run, pullback. Where did it pull back to? 131, we'll ballpark it. It ran up to 142-ish, we'll ballpark it, from 125-ish. So you're looking at about a 17-point move, and then you pull back from there by what, $11, right? So probably somewhere in that 618, a little bit more than 50% retracement on that, right? If I'm doing my math correct. I believe I am doing my math correct. So yes, for sure. So that's a pretty healthy pullback. And now, right, it's trying to find some support near the rust-colored 150 SMA, and that's just a little bit above the 200. But look, the intermediate trend is still down. Look how it really has struggled to really overtake and authoritatively close above that declining 20 SMA. So I think that's what you would look at if you wanted to say, okay, that's showing me some positive vibes here. It did correct about 61.8%, or somewhere above 50 and between 3/4 or 0.75. So we'll give the benefit of the doubt there. But, again, nothing I'm rushing out to buy on Monday morning unless I start to see the momentum really start to shift. And it just hasn't done that. But they do come after this sector often when they want to rotate into something more defensive. So keep an eye on that for that reason. RSI showing like closer to oversold, but not there. A little below 50, no big deal. Staples, another defensive area. This did also catch a bid on Friday. This has also been out of favor. So a lot of the defensive sectors were doing quite well early on, and even SPY and diamonds, they were kind of out of favor relative to other things, and Qs and tech were out of favor relative to the other things. But ever since this really ran its course, these have fallen out of favor, and the more offensive sectors have been in favor. But what sticks out here is the possible double bottom right around here. So not, again, I'm not jumping on board. I haven't seen enough from it to even think that it's over, it's done falling. But much like what we just said about the XLV, you can see that this has given back a fair percentage of its gains. It looks like about 50% of the gains that it made, ballparking it. So it wouldn't be crazy to see this thing turn here, right? That would be if you're still more in a bullish environment. But I need to see this not only above the 20 there in light blue, but the purple at this point, because they're so close. It starts getting above there. I don't know if it's a great trade, but I would say, look, there could be some trades within there. It just look at it more so. I think that the market is maybe shifting towards a defensive tone, a little bit more risk off. And that's going to be a change from what we've seen for most of the year so far. That's why I think this kind of work is important to do, that you see how the market's really the character of the market and like where you are. And I don't think, it could all change quickly, right? I never know what's going to happen. But what I would say is, look, it's not the rip roaring run kind of great vibe that the market's putting out to end last week the way that it was prior to this. There has been some really good vibes overall, and I don't sense that. I don't see that right now. So that's really where this comes together, I think, and the rubber meets the road, and it lets you manage your positions, I think, in an informed way. Like, you know what, this market, I don't know if it's on the best footing one way or the other. Let me just take what I can get. I don't want to overstay my welcome, be really even more nimble and not so biased until we see the market reveal more to us, I think. So clearly on the 200 in purple right now in the XLY, and you can see this is a little bit of that risk off where consumer discretionary was out of favor as the XLP kind of became back in favor a little bit. 20 is the next one down there. So I think if you don't hold that 20, right, you've got to start looking towards the 100 and the 150 down here. And sure, again, I say the same thing every time. There's going to be flat lines in there that are on Ryan's charts. If I were going to add flat lines to make my charts even more difficult for everyone to decipher, there'd be flat lines on here. But really, we're just sticking with the SMAs. And I think your next levels down are down there. So let's ballpark that near, we'll say 141 for now. So yeah, you don't hold the 20. That's a big deal. This is going to look more like a false breakout attempt. And as I noted in macro measure, my personal take on it is that a lot of folks have dropped a lot of money, I think, a little prematurely into this market. And much like UOA, where when we see the UOA, that tells us that there's potential for volatile movement that's going to start unfolding in a sector or in a stock more so than normal. I feel as though that's the recipe as well when I see a lot of money that's flown into stocks, certain stocks, or of course, just across the board in these ETFs. There's a lot of money, I think, that headed in there. Again, I don't know if it was short covering. Probably at least some of it, right? But I don't know if it was that. It was performance chasing. It was catching up. It was, the retail money thinking it's over. Don't know. But regardless of what party did what, a lot of money went into this market since the bottom in October. I think they're getting ahead of themselves, as bulls often do. I think that's what tends to produce these bear market rallies. And they may be right? We may be thinking a couple months from now, boy, the bulls were right to be so headstrong about it. On the flip side, if a lot of the disinflation assumptions do not play out, things ratchet up geopolitically. You all know the drill. Some of that bad economic stuff that Ryan and I keep talking about really starts impacting more on the front page rather than the back burner. Come talk to me if you're ever short on cliches. But bottom line is, right, I think that is not, they're pricing something in that I think they could definitely be in for a rude awakening. So I could try to squeeze one more or shoehorn one more cliche in, but before we're done with that part of the discussion, but I think I'll leave it at that. Anyway, XTN, an important sector in my book, right? We have to give the bulls credit in the sense that we've seen a lot of positive developments technically. And that's why we were so willing to embrace what was going on. But you knew the butt was coming. But look at this. I mean, this is impressive, right? Get above the 200, close above that very obvious critical, high in the downtrend phase. After putting in this higher cluster low relative to here, then base right near there, then go with a nice breakout. But was this a fake out? This is kind of what I'm thinking about. I'm thinking still could happen in the market ultimately, that not only do a few of the more recent highs get taken out, but they work the market in terms of the SPYs above 431-ish. And that would really convince even more people that we're happy days are here again. And then you get this start of a rug pull. I mean, look at this rug pull. That's pretty rough rug pull for a couple of days right there. And it could get worse. But look, we know that there should be some support right about at 76, call it 76-ish, just to put a round number on it. So there should be something coming in there. There's going to be a couple more flat lines on the way down, but notice, right, there's a pretty darn big gap there between your 20 and your 5,200 confluence right there. So, if the market lets go for a while, they let this thing go for a while, that could be some rough sailing. You could be all the way back down there rather quickly. So just keep your eye on that. Got out of the Bollingers, stalled out, lost momentum, right? And then boom. So this is, if you wonder why do you keep these tools? I have a lot of tools. I have a lot of different layouts because I kind of have this compulsion for comprehensive approaches to things. That's my own issue to deal with, but no, it's just what makes me feel better is that a lot of different things are painting a picture to me that makes me have greater confidence in what I'm seeing, what I'm basing trade ideas upon, how I'm handling things myself at times. I mean, well, when I'm more active, when I've got the time to be more active, but anyway, you get the idea. So I added a line in there. Clearly, you can see that. You can also see that it broke that line. You can see that this XLB, the basic materials, are clinging to the 50. So that's concerning, I think, right? That you're right back here at the 50. Another one, I think, with a chasm, right? I don't mean like, hey, this is a great opportunity. We're gonna drop $3, but it just visually, right? That could really lose its grip quickly. So that looks concerning to me. Remember, this is these basic materials and XLI were doing great. You could sort of see the makings of a triangle in here with my line that I just added, and then a line up maybe in here. We could just draw it just to split the difference. And you kind of got towards the apex of that triangle and they're breaking it down. Is it a false breakdown? I don't know. Could be. Right. But I always treat it like get involved. No, there could be a false breakdown, but also no, could be a real breakdown. I'm looking at this and I'm saying, I think this is, as of right now, the way the bears have kind of asserted control pretty forcefully. I think if it takes out this low in a rough market, this thing's going down. I think this is one that looks pretty darn bearish at this moment in time. So, and remember, it's got a 48 RSI, so it's not as if it's already oversold and can't fall anymore in the short term. So that's one. And materials not acting well. And interestingly, though, they did save it. It was worse, as you can see on Friday. They saved that and they saved XLI. And XLI, it looks a little bit, this looks a little more interesting. If we step back on this, this looks good. I've got to give them credit, right? They double bottom with positive RSI divergence here, take this thing up strongly. And then they bring it all the way up here. And we've got one line there. Let's add the flat line that we just had there. And I'll just try to put it against the former highs, right around there. And they get it a little bit beyond there, like they always tend to do. And now ever since then, right, it hasn't been able to sniff that level again. And they've got it down here on this little support line, which will complete our little triangle drawing. So this is also interesting in the sense that I would be, oops, I want this line here. Come on, guys. I want that line to kind of tie into that one so you all can see the kind of triangulation that's going on there. And some people are going to draw other lines, and I've seen people draw lines and catch flack from people for drawing lines, but I'm pretty sure Some technicians are going to put another line across here from there, and that line would look something like this. And I have no problem with any lines. I think you learn what works for you. And but that line to me is valid right there. And I know some people would catch flack for drawing that and do, but that's going to dovetail with that 50-day. And that's down, you know, that's not down all that far from where we are. We're talking a couple of points. But yeah, if you crack below the 50 and then especially you lose this, you're probably visiting these lows, you know, so that's vulnerable after a false breakout. The thing is, right, does the gang want to really put a real call into question this, create a false breakout, no surprise, call into question the validity of the bull market, switch over rally that we've seen, the pivot we've seen, the breaking of the downtrend that we've seen, use the second half of February to do that, and then support from there and tack on a few more months of bullishness as that third year in the presidential cycle suggests that it could happen and has happened quite a bit in the past. So maybe, right, that's what we have to think about. But this would be a little concerning, excuse me, at this point. But I really need to see this crack before I need to see this crack Friday's low before I'm even entertaining, you know, getting shorted right now. Otherwise, just wait for this to work its way out of this little triangular formation one way or the other. And clearly, right, if the market rights the ship and this rights the ship, this would maybe be a nice trade because this is pretty big. Some people are going to have a rectangle in here. Other people are going to have other patterns, cup and handle, or it's with multiple handles. It goes on and on and on. But this could be a nice move. And, you know, again, surprises me. But again, I don't have a macro team working for me, right? I don't have a whole team of analysts and so on just working, you know, all day, all work week long to inform me as to what's happening worldwide, you know. And for all I know, things are better than I realized. Here we have XLU. Just note that this was out of favor because, right, who cares about utilities really unless you want to play a little defense, is typically the way that thinking goes. They started changing this around rather dramatically there, and that's anytime you have that kind of strong reversal into something defensive, just like we saw with the other defensive sectors like XLV having a good day, the XLP having a good day. When those things all start, and XLE being like what it is, something to keep an eye on. But, you know, this is another thing. It's like, wow, when you look at this chart and you're like, geez, there's a lot really happening here for such a, right, something that's considered like a boring sector. In terms of the visual aspect, there's been a lot of movement, right? Because people keep positioning, I guess, for interest rate shifts and so on and so forth. But now you're below all the SMAs again, and most of them are downsloping, if not all of them, right? So that doesn't really bode well. That kind of says, well, probably rates go down and the bulls are in control of this market, or that's the anticipation. We're investing that way now. But again, from where it reached, this would be an area that you, if it does start to reverse, probably got to get above that 20-day to really matter. But if it does, just keep an eye on those and the other sectors I'm discussing. The reason I say that is because they have helped me, right? They help me to do what I do. And I think they keep you informed and help you manage your position. Now, SMH is one we look at, big leadership area. NVIDIA looking like it's possibly about to lose a little bit more than it already has, which is really a big leader and a big name in that space and a big name overall in terms of weighting. So be careful if that's the case. But look, if NVIDIA goes down even more and that starts to get some sympathy, you know, you've got to look for the 20. You can see there's sort of a flat line in there as well, right near there. So the 20 is probably a big deal. Once again, losing the 20, it probably opens you up for significantly more downside. So you probably want to keep an eye on that. And I think that the bulls have clearly been in control of that sector now for some time. And I think they still are. I would give them the benefit of the doubt until the 20 is lost. If they lose that support of the 20-day, then I'd start to get more concerned about it. But it could happen, right? It's not that far away. It's certainly within distance the way that SMH can move sometime. But that's a quick like a quick assessment, and there's really no denying, right, that you've got that higher low. You've got this sort of cluster of highs here that you exceeded. In fact, this high exceeded these highs, that it exceeded these highs, it exceeded this high. This is normally, great stuff, really. And you've kind of got that inverted head and shoulders we've talked about so many times, but got extended outside of your Bollinger Bands. If I show you some extension stuff, excuse me, you get this over here for everybody. You'll see on this, if I can grab the right pane. Come on, guys. I want you just to notice this is how the distance we were stretched recently from the 100 SMA. And if I bring more time into that, you'll see that it's not that frequent that you see that kind of stretch in this sector, I should say. You've got to go back to you've got to go back here, right, to the kind of post-COVID response days to get back to that kind of overbought reading. And even then, which was extreme, you don't see that often. Now, that didn't happen relative to 200, but it did happen to relative to the 100 there in white, if you can see this little thing. So that really got stretched. And this is one thing I like to, like I said, I keep a lot of different layouts for different reasons. And I don't try to chart all of them in real time on everything that I put in for different services, but they're very good at this kind of thing. Things like this are very helpful to me, I think, right? Because you don't want to be afraid to take alongside trades, but I want to be able to couch it and tell folks like, look, in some ways SMH is really extended right now, and you got to be careful on the long side. All the summary notes that I put in, sometimes they're try to bring a little levity to all the serious trading stuff, but they're really meant to help people and sort of frame it like this is how I would handle it at the very least. I would keep this on a short leash. And if I were trading that kind of stuff right now on the bull side, I'd still say we had to keep it on a shorter leash than, even though bear side would be counter trend. I think you'd keep the both of them on shorter leashes than if you had corrected and you were coming out of a correction in a bull market. Then I'm going to be willing to let the stock run a little bit longer. Got to get back to the right template. That would help. So here's the XHB, kind of like, let's go through it again. Impressive, right, to me that they've been able to do this in this U.S. economy, that home builders have jammed as much as they have off the bottom. It's not uncommon, though, to see this kind of, even within a larger bear market, impressive rallies. This one became extreme outside of our Bollingers. This got up there on the RSI, was at 76 at that point. I think we said, this is a little haywire. And now, right, you've been pulling back. And again, you don't have to chart the way I do. And there's a lot of other things that I do off screen that just too time consuming. But, this little kit that I've got built here, you could replicate this kit in just a few minutes. And having things like this are just good visual references, right? Because it's really hard to say. You might be able to say, well, I could infer that things were a little just with the RSI there, but I think when you see that your Bollinger Bands have widened a little bit and you're still way outside of them, it kind of tells you like, look, you got to be rolling really aggressively if you're a bull, in my book anyway. As I said, you get outside of Bollinger Bands, usually right after that momentum dies off, you either at least get an extended pause or you get a pullback, or both, and I think that's nothing crazy's happened here. This is what we would expect. This clung to the 15 SMA in red, just above that 20, which is just above, I think, right, just barely above where we would call it like the breakout level, or where former resistance was, now possibly support. So look for this to hold there. I think if it doesn't hold, let's put a number on it. Let's say if it doesn't hold above 67, that's when I think you maybe start to get a little worried, like, this could definitely correct more. Again, back down to the next flat lines that would be near 65, and then this 50 SMA, and then you would come back towards where this other support line is that I have drawn there in orange, right? And then you've got to see what happens from there. But this is, I mean, I don't love this spot to get involved as a bull. So again, I keep saying, I keep thinking that more than likely we should come down a little bit more in this market, the way that things are shaping up when I look at all these things. This is one that I'm glad we started getting a little concerned about, because they did bring this back in. Right now, this has been something very interesting in that you see that support line that got lost. It lost the 20 there in light blue, lost the 50, threatening, right, to come back to the 200, 100 confluence area. So, the Bollinger's widened out dramatically. That was something that was concerning, right? I think you have to be concerned, as we just noted, there was negative divergence there, all kinds of stuff. Could this be forming a big cup and handle? Well, maybe, right? There's a big kind of cup there. Maybe there's a little mini shoulder here. Maybe it's an inverted head and shoulders potentially forming. We just don't know. But right now, I think with last week's development, I'm concerned that the bears have seized more control over this. The bulls have really ceded control. So I think if this month closes out roughly, that would be not good in terms of the sort of immediate term, intermediate term situation. I mean, that could put us with another failed attempt to go, and it can take a while to really finally emerge from that. So I am a little concerned, but I am, I'm not regretting not letting my longs go up here. I'll tell you that, because my long-term plan personally, and this is not any kind of market rebellion idea, but I've been accumulating. I accumulated a lot. I was fortunate to accumulate a lot back here, and I plan to buy more. Not as much as I wanted. I kept thinking there might be another leg lower, and that my hopes didn't materialize. But I would welcome losing on all my buys here. Let's put it that way, because I will add significantly once we're below there to my physical holdings of gold and silver and platinum. Let's take a look at copper. Speaking of the metals, let's take a look at that. We have noted that this was kind of interesting, right? That and lumber had started doing better kind of in the face of what we thought should happen, sort of in our mind, right? But hey, how's that happening? But it did. Clearly, the rising 50 there in gold is your level, right? If that doesn't hold there, they probably correct this thing more, right? So be on top of that. I know you're probably not trading the copper market, but I mean kind of like the ramifications of that. So losing the 50, this kind of helped lead the charge of the bulls. You could see that it bottomed before stocks did. So did I think lumber. We got to get the right lumber future if we can get that. I guess we're still trading in March here, but no, I don't think this was, but I don't think this was it, but it doesn't matter now. I'm not going to go into that, but this also is backing off. You can see that backed off pretty solidly. So we had a line in there. It lost that. It lost to 10. It lost to 15. It lost to 20. Lost to 100. It's on the verge of losing the 50 there in gold. So this is a really kind of large pullback, and it's a pullback that's its duration, right, is getting a little stale. So it's getting a little stale, but still, right, this stuff can rumble for a while. I think your next level down here is probably going to be about, let's say 401. So if they don't hold this, let's put it near 401 that it would come back to, somewhere around there for now, if they lose that low and they keep on it. But it's starting to get close to oversold. The RSI readings right now are up in here. You can see that the 14 days flashing 40. So a little more room to go maybe to get completely oversold, but that doesn't bode well for things. That's the reason why we've kept an eye on those things, is that when you look at lumber, you look at copper, these are important things, and they're not on fire the way they were. So that kind of adds to my worries about the economy. That tells me that maybe some of that data that Ryan and I keep uncovering, it's hard to find relative to all the bullish chatter. But what we like to do is just what the charts tell us to do. but always kind of be on the lookout for concerning signs, because the media it tends to just have people on talking their book, financial media, and those people, almost most of them by far, are almost always bullish, because they're almost always fully invested for whatever reason. But I guess it makes life easier to say, well, we didn't lose as much as the last guy or the next guy over, but we lost less than him, rather than trying to actually make their clients money on the way down. But, this basing formation is here, did start moving up. We saw XLE moving up. This is trying to do something. I think if this can overtake the 100 there, that would be helpful, right? And then this high back in here at 82.64. So a few more percent, maybe, right, that you've been basing now for 3 months plus, maybe that would let you do something finally. But that's been, we've been noting this for some time, that crude has been struggling, and XLE seems like it wants to go. So the stocks have seemed like they want to go and held up better. And, maybe the stocks will win that tug of war. I don't know. Maybe maybe crude will just never get out of its own way at this point, and then stocks will have to readjust. I don't know. It's just, unfortunately, I'm away from that market. Barely can cover everything I cover for Market Rebellion in real time. Just like Ryan, just like Greg, we're always we're doing our best all day long, because we're trying to look at so many things for different services to support people, get them hopefully good ideas they can work with. But yeah, I think this is interesting, and I think you've got to look at it and say, has this done enough corrective work, and could it break out? I think now that it's getting close to the upside of this kind of rectangle in here, it's worth keeping an eye on. But remember, right, if this goes, it could help support some of those stocks that are obviously in the sector. But at the same time, that's not going to be good for inflation, right? Overall, I don't care. I told this story before, but I think it was on the very same day many years ago, I saw on CNBC, they had different guests on, and one guest explained why rising oil and gasoline prices have no effect on the consumer. And another guest said that falling oil prices and gas prices will be a boon for the consumer, in so many words. And, no matter what, it's always, no matter what happens, basically, it's always bullish, doesn't hurt the consumer. But I do think clearly, right, with the inflation calculation, even the doctored ones that they feed to us that are not legitimate, but that's all we have to work with in terms of what people focus on. Unfortunately, there are alternative calculations that I think are a lot more realistic that people seem to ignore. But any person that's lived in the real world can tell you that healthcare, automobiles, housing, the cost of so-called higher education, the list goes on and on, food, clearly, energy, clearly, that all these things are far more expensive. But other than the things you really need to live with or live on or run your life properly, everything's good, everything's great. But yeah, so from here, you got to like that if you're a bull, that, hey, at least I'm finally consolidating. I arrested the downtrend. I'm back above the 50. I'm back above the 20. If I can take out that 200, that only leaves a couple more long terms. But like I said, I don't know if this really starts to get its mojo back. And I sure hope EOA turns up, or we can get some ideas in our other momentum-oriented services if that were to happen. But that will be kind of rough, I would think, right, for the consumer. So kind of that damned if you do, damned if you don't situation there, that it helps the indices move up. But what's it do to the consumer if they do put a strong spike together? So we could go on, and I've got to call it here. Been a heck of a day recording these videos. There's so much, it's such an interesting juncture. We covered a lot as usual. So I hope something that I've shared with you in these videos, especially the sector situation one that we're in now, helps you out this week or helps you out in the future. And all I can say is thanks for tuning in, and be nimble out there, right? I think we're coming into a challenging week. It's not as clear cut as it has been at other times. And anybody that's been trading for a long time will tell you that when you're not in a strong trending phase, being nimble is a very critical way to be. Ultimately, when you're in this more of a choppy or corrective phase that gets a little bit more volatile and noisy, You could still make some money in there, but you have to be really swift about it and take it off the table. And if the worst thing that happens to you is you hit a bunch of singles during maybe a week like this, if my instincts are onto something, if the worst thing that happens to you is you hit a bunch of singles, that's okay. There's going to be other times where it gets run away. So we'll see what happens. And I wish everyone a great week. Thanks for tuning in.